Aloha master traders and money magnets. I'm looking at futures and I'm looking at the NASDAQ 100. We're getting two different contexts here. We're getting two different messages from futures and the NASDAQ. We look at the futures first. Now, last week I talked to you guys about how we broke down the multi-month trend line. Futures needed to recapture a certain level, which it did not recapture a certain level. It actually broke down support level, which I had at 58.44, broke it down. It hit the 200 daily moving average. It also hit my fib level around 57.77, washed below it just a little bit before it started getting some buying pressure. Now you look at the daily chart, a daily chart breakdown of the 200 daily moving average was denied. And then here's today's candle where it actually bounced from the 200 daily moving average, recaptured the 58.44 level, and it's trying to recapture that 58.81 level. It's above it right now. Now the context that I'm looking at is the uptrend line. We broke it down last week, showed a little bit of follow through before bouncing, and now here we are back testing that trend line. Now, if you guys are watching my futures content, please watch my NASDAQ content because it's two different messages here. Now, a breakdown of the multi-month trend line, and now we're back testing it. It's still overall bearish price action, at least for the short term. It's tradable level to level style day trading. If you ask me, it's still tradable, but it doesn't look like it's made up its mind what it wants to do. If it wants to give us that next leg down after the breakdown of the multi-month trend line, or is it going to put in a bottom and head back up to new highs or back to all-time highs? I'm going to give you guys the levels, and once we know the levels and setups, the price action is going to give us the answer. It's going to answer that question for us either today or tomorrow, and we will know which way to bet, if you will, or trade. As of right now, 58.81 is support. They're trying to recapture it, which keeps the next resistance at 59.30 in play. 59.30 is a fib level, but also based on the multi-month trend line. So stay bullish for the short term as long as above 58.81 with 59.30 as the target. But if futures can clear 59.30, that's a good sign with a high probability that we're going to head back up close to the 6,000 area. Okay, 59.90 would be a target. Above 59.30, 59.90 would be a target. And above 59.90, I got 6,000 and 6,014 as a target. Bottom line, stay bullish above 58.81, and clearing 59.30 should send us higher. If we're going to get bearish, you want to see 58.81 and 58.44 fail as support. A big win for the bears would be to break down that 200 daily moving average. You guys seen it failed to break it down last week, and today is treating it like a buy zone support. So you want to see that level break down if you are a bear. So 58.81, 58.44, the 200 is currently at 58.09, and then 57.77. You want to see those levels break down. If those levels break down, this bounce that we have here is just a back test of the uptrend line, and we are heading down a lot lower. So let's put it all together. Above 58.81 is bullish. Clearing 59.30 would be your bullish follow through. That's the price action telling you we're going up higher. And if we break down 58.81 and 58.44, that's the price action telling you we're going to go back and test the 200 DMA again. And below the 200 DMA, the price action is screaming at you to stay bearish. We're heading down a lot lower, possibly down to the 50 DMA. Now, the NASDAQ is telling a different story here. Now, you guys know about the area of liquidity, how market makers, because we are trading in a manipulated market, the market makers provide the liquidity to move the market however they see fit. And a lot of times they set up support levels. Look at this example, this visual example, how they set up the support levels, and then they'll push it below the support levels, because below the support levels are clusters of stop loss, the liquidity, the AOL, the area of liquidity. Lots of stop losses. They'll go stop loss hunt, hit the stop loss before pushing the market higher. I'm looking at the NASDAQ, and there's a good chance that that was an attack of liquidity where they go and stop loss hunting. If that is the case, this could be a false breakdown setup, and that's what it looks like it's trying to do right now. Let me go down to a 4-hour chart real quick, and here's the 4-hour chart. If this is a false breakdown setup, an attack of the area liquidity, false breakdown setup, stop loss hunt, so many different names you can call it, but the idea is still the same. If the idea is to be bullish, because this was just a stop loss hunt, I have next resistant at 21,362, 21,362, and then 21,418. If those levels can clear 21,362 and 21,418, then this false breakdown setup is playing out. We are heading up higher. Get bullish. Now, when we go back to a daily chart, you can see that the breakdown of that multi-month trend line is all the way down at 21,163. That's also a fib level, 21,163. So that's support. If you want to get bearish, you want to see 21,163 break down. You want to see 20,000 break down. Those two levels break down, then the breakdown of the multi-month trend line is intact. It is not just an attack on liquidity. It's not just stop loss hunting. It's an actual breakdown, and we're heading down lower. But it needs to break down 21,163 and 20,000. Those levels fail, get bearish. If we clear 21,363 and 21,418, get bullish. We're going back up 21,562 and possibly higher to 22,000 plus. That's my plan for this morning for the NASDAQ in the future. Know the levels and setups and trade it unbiasedly. Let the price action tell you where it's going, and you as a trader just follow it and trade in the direction, level to level style. And if you want to catch the home run move, let your runners do the heavy lifting. Peace.